Hey, everybody, and welcome back to another episode of the monthly market housing update. I am Katie, and this is
Matt, and this is
Ryan. Welcome back, everyone. Happy June.
What's up, team?
Happy
Welcome
June.
back. Yeah, we're 6 months into this thing, guys, into this 2026 thing.
Yeah.
Triple digits are here, so it feels like June.
Are here. It certainly does. As always, if you are finding value in these monthly market updates, guys, we are hyper local. We are showing you the real data. Then please reach up and click that follow button or the subscribe button on whatever platform you are listening or watching on. Share our show with somebody that you think needs to see it. Maybe they're just getting into the whole housing phase. Maybe they're in it. Maybe they're homeowners. And it's really important for them to understand the actual value, what's going on in their market, their very hyper local market. So please do share and like the video, because that just tells the algorithm, show this to somebody else. And we appreciate that very much. So before we start diving into all of the fun data that we have for you today, let's start with rates. Ryan, take it away.
Yeah, gosh, this is our fourth market update since the war in Iran started. And really, the conflict is still having the biggest impact on mortgage rates. Mortgage news items, like jobs reports or inflation numbers that we're always closely watching. And even if the new Fed chair being sworn in, they're all taking a back seat to the war. And almost every day, mortgage rates may drop with optimism that we're closer to an agreement, or it could jump, if there's renewed attacks. For example, just last week, mortgage rates improved as there were discussions on a peace deal and reopening the Strait of Hormuz. But just this week, mortgage rates have jumped back up after Iran suspended negotiations, following Israel's attack in Lebanon. So, this will continue to be the story, because the war, it's raising oil prices, raising costs, which in turn pressures inflation higher. And, we always talk about it, that leads to higher mortgage rates. So, we know once a peace deal is agreed upon and the Strait opens back up and oil prices drop, rates will quickly improve after that. So we're all hoping for renewed optimism on an agreement and closer to having a deal signed here very soon.
How are you feeling, or what are you seeing, I should say, in terms of applications that are coming in? Do you have buyers that are still kind of sitting the fence, waiting for something to happen, the war to end, rates to come down, whatever it is? How are things looking over in your office over the last month?
Yeah, with our temperatures increasing, so has buyer activity. Actually, we have seen an uptick. I know it usually happens around this time of the year, after Memorial Day and as the summer starts picking up and kids are out of school. But we're seeing a lot more families going out and start looking at homes, and I think that has a lot to do with inventory going up a little bit more options, maybe some softening of some pricing a little bit over the past year or two as well. I think people are a little bit more motivated. I know a lot of people have been on the fence for a while, waiting for lower rates. And as we're seeing a little bit of a jump from the beginning of the year, I think a lot of people are just ready to move. They're sick of waiting and they're ready to start moving forward with something. Maybe their family's grown, maybe they need a bigger yard. And just regardless of where rates are heading, they're ready to upgrade.
Totally agree. And we can see it in the data, guys. So first slide of the day, and I've got a couple for you today, is what we're looking at here for those that are just listening on the podcast versus watching the video. This is May 2025, May 1st through May 22nd. So it's not the full month of May, guys. Okay, let's keep that in mind. So May 2025 versus May 2026, same amount of days. So 16 working days in this particular time frame. And look, every single price point has increased.
Yeah.
So the amount of sales that we were seeing in May of 2025 across all price points has increased to May 2026. So I don't see the sky falling there, Matt. Do you?
No, not at all. Not at all. And I think it's there's a lot to be said by that data, and obviously, it's this is taken from Cromford, so it's very real data. It's not like
Right.
it's going to be packaged for clicks or anything like that.
Right.
And of course, if you're listening to the regular news, which I'm sure you have some slides to highlight
I'm sure I
where
do.
I'm going with this. Yeah, you might be like, what the heck? This is not what I'm hearing on my daily update from mainstream.
Exactly. And, that's a really good point. Let's just talk about it right now. So these are, and this is just two examples, guys. There are many, many more examples than just these two. But these really stuck out to Tina Tambor, who is the senior housing analyst for the Cromford Report, who Matt just referenced. I get a lot of our data from her presentations and from our subscription to the Cromford Report. They offer daily real estate market insights here locally, and the data is just gold. It is just absolute gold. We live and die by it. So the first article, which came out May 4th, 2026, Phoenix housing inventory surges toward record highs. And the clip is active listings across the valley. I know I'm dying too. Active listings across the valley have climbed to just under 20,000, a level only surpassed in 2 months in recorded history. Okay. Bold underline, in recorded history. They're referencing April and May of last year. Now, Ryan and Matt, you both have been around with me long enough to know that ain't recorded history.
No, but those are wonderfully robust, clickable words. Surges, record highs. This is just.
Shall we look at recorded history real quick? Because I got that.
Yeah. Let's see the real numbers.
Let's look at it. Let's look at recorded history. Okay, guys. So here's what you're looking at right now. You are looking at the demand and supply index. So we're looking at basically the levels of supply and demand. 100 is normal. We are hitting right about that 100 point. You can see where supply and demand are really close together. Okay, that's important because when you look over at recorded history, what is this? Started in 2006, 2007 to 2008. Look at the supply line. It is like on Mount Everest, and the demand line is like below sea level, guys. So this here, they forgot about.
You're not looking back far enough, I guess.
No, they're not looking back far enough. They're being extremely convenient. What's really funny too is there's a lot here. You can, and this is what you see a lot of people trying to create this type of negative clickbait where they're clearly manipulating the numbers. And you can do that. No matter what set of numbers that you have, you can manipulate data to seem like it's the end of the world or the beginning of greatness.
Absolutely.
And you've got to, obviously be as non-biased as possible and think about this logically. The other thing that is when you look at this, it's like supply and demand. Well, we know the two biggest forces that come from supply and demand are going to be population. And it's so funny because it's just straight across and they're looking at this when you're really having to think like, what is our population increase from when we look at this supply to where we're at now since 2008 to now. Mm-hmm. It is a huge, huge difference. The other thing that you got to look at too is like, what's our average income? All of these things. And there's a lot there that you've got to take into consideration when you look at this. And when you do, you quickly realize, oh man, these guys are really digging deep to create these really, really crappy, false, fake, negative clickbait posts.
Totally agree. And one slide that I haven't shown you guys that I didn't have prepared for today, but you touched on income, is the average hourly earnings in the greater Phoenix area has grown significantly since 2008. In fact, we are up, it's not telling me what we're up since then, but I'm seeing, some pretty large numbers here. And right now our average is $37.45 an hour. It was not that back in 2006, 2007, 2008. So anyway, that's an interesting piece of data that I didn't have prepared for today, but you mentioned it, so thought I would as well.
And it's just jobs in general, not just wages, but I mean, if you look at the stock market and how it's booming with really the AI narrative, and a lot of it has to do with semiconductors, data centers, manufacturing, aerospace, everything that we have here in Arizona. So we're getting the jobs, we're getting the income. And what I like about this chart and this index is that you have to remember, like, usually the real estate market is kind of like a pendulum, and we had that period during COVID when rates were low, and it swung to one side where there was a lot of demand and not enough supply. So whenever you kind of stay at one side for too long, it's always got to swing back in the other direction. And we did, and we're seeing more supply and a little less demand at this time, but that's what's required. We have to see it swing back and normalize, and we're getting back to that area, so it's kind of interesting how that works out.
I 100% agree.
Yeah, totally agree. So back to the headlines, guys. So that was the first one. Now, 10 days later, after we are our housing inventory is surging toward record highs in all of recorded history. Okay. 10 days later, Arizona facing home shortage as unaffordability weighs on potential buyers. Huh?
You can't make this up,
Huh? You seriously can't make this up. So, poor y'all out there who are following these headlines, it's got to be making you crazy. Like, you don't know what to think, do you? Because, what a huge contradiction in a 10-day period. That's crazy. Real estate doesn't move quite that quickly, guys.
Yeah. And thanks for tuning in, guys. We'll give you the real stuff, not these confusing headlines.
Exactly.
Super. And it's funny because, you look at the media in general, especially, the ones that you're highlighting here, and they're always trying to claim that they're the virtuous ones for the underdog, for the person that, that never gets the opportunity. And like here right in front of us is a time where they could actually be truly virtuous instead of just trying to get clickbait, actually like steer who they're trying to protect, that, hey, this actually might be a great time to buy. And if not right now, it's coming inevitably quicker than we think based on all the numbers that we're looking at. So for those that always don't think that they get a shot to get in before prices surge, before all this stuff, like this is it. And when you start spreading this type of news, it's just literally, kneecapping those that do feel like, oh, there's never a time to buy. There's never opportunity. It's just instilling more fear in them to go the opposite way. And it's super sad. It really is.
It is sad.
I really do think that this is the time.
I agree with you. And unfortunately, what you just said is causing people to have paralysis, which is just putting a damper, putting a pause button on their lives, on their ability to get into something that's going to gain equity that, they can pass down to their kids. Like, they're putting the American dream on hold for these headlines. And that's really sad.
Yeah, no, 100%. But at the end of the day, they kind of want to preserve that victim that status, because
mentality.
That's what the news makes the most money off of.
Yeah.
So it's like understandable, but it's sad, honestly. But I think there's a lot to be said, exactly what's happening. And even you were mentioning before, I think you have something about cancellations.
I just shared that with you. I don't have that slide, but I just shared that with you. And to be clear for the audience, we are seeing a lot of listing cancellations.
Yeah.
Which indicates, it doesn't indicate distress, because somebody's not going to cancel their listing because they didn't get the price they wanted, or because they changed their mind, or their circumstance changed, or whatever. If they're in distress, no, they're going to sell that property and do everything that they can to sell that property. So that was the stat that I was sharing with you.
Yeah. And that's huge. And I think that is so important to hear that if there was really blood in the water, and sellers really had to look at what their options were, and they had to speculate to say, all right, do I just bite the bullet right now? Or is there enough light at the end of the tunnel? Or do I feel good about what I have to deal with to hang on to this property and just cancel it? And the fact that they're canceling listings and going back, that says everything.
Yeah.
That not only says that the sellers have options, they don't want to give it away, but it also speaks really loudly about something else. And I think that it's important to put focus on this, and we've talked about it before. It's our rental market.
Boom.
Okay. And when sellers start to look at it and say, hey, I either need to take another 40 grand off my list price, which, if it's a $500,000 house, it's almost 10%, or, or what are my other options? Oh, I could rent. Well, let's look at it. And then all of a sudden you look at the rental market and you're like, wow, that looks pretty good.
Mhm.
Like based on my probably really low interest rate that I have and where I'm at, yeah, okay, I got to bite the bullet and rent this thing, and I'm probably going to cash flow on it regardless over the next 12 months. It's going to be a
Exactly.
pain in the butt, but I'm sure as hell not going to lose 40 grand. And actually the upside is I'm probably going to make 40 grand because it could swing. So that says so much. If our rental market wasn't there, which would be a true indicator of economic collapse like we saw in 2008 when there wasn't even a rental market when everyone was buying these rental homes, that's the opposite right now. Like we have a strong rental market and that's propping it up. And once again, if we saw that dipping, that means people are leaving the state. That means wages are down. People aren't being employed. A lot of these negative things would be true. And then therefore the seller would be like, I can't lean on rental as an option. I do need to bite the bullet and sell. And we're not seeing that.
Right. Right. Totally agree. One other thing that I wanted to touch on with this article that came out 10 days after apparently our inventory is highest ever, is that it's saying, you know, unaffordability weighs on potential buyers. And I'd like to ask Ryan a little bit about that. How has the affordability conversation gone with you and your clients currently as compared to last year? You know, with respect to the fact that concessions are still pretty high and buyers are kind of making some good deals out there is what I'm seeing. I mean, are you seeing that?
Yeah, they are. You know, fortunately on our side, you know, being a mortgage broker, I work a lot, you know, with buyers, and it's really reassuring to see how many more options that they have and how much power they really have, because it is more of a buyer's market in a lot of areas, and they're able to ask for more concessions, maybe even offering lower than list price, getting a little bit competitive with that. But affordability still is an issue. I mean, earlier on in the year, we had rates below 6, and that was very, you know, reassuring for buyers that rates were going to continue to drop. But you know, as we mentioned, with rates jumping with the war in Iran, you know, it was been a little bit more discouraging, and you know, payments have elevated a little bit from the beginning of the year. But just with the state of the market right now, and the ability to get more concessions, that gives us so much more ability to really find a way to get the payment that the buyers want. Because with concessions, we could do buydowns, you could do rate buydowns, you could do temporary buydowns, where you could have, you know, up to 3% less than the market rate the first year if you have enough concessions for that. And there's still a lot of optimism for the future of mortgage rates to come down. We all have that. You know, we have a new Fed chair, Kevin Warsh. You know, he does want to drop rates. We know that. We know when inflation comes down, oil prices come down, they're going to have more of an ability to do that. We don't know when it's going to be, but we know within the next year or two, we will see lower interest rates. So if we have the concessions needed to lower those payments for the first couple of years, there's a lot of optimism that, of course, you could refinance down the road. It's the whole, you know, marry the house, date the rate kind of a thing, where you find the right house, find a way to make the payments work the first couple of years, and just know refinancing is always an option in a year or two.
Right. Yeah. Hear this, buyers. You don't have to wait for the rates to come down to get a lower rate. That's what Ryan just said. So
yeah, with more concessions, there are lots of ways to get you the payment you want. So, and yeah, that's a big discussion that we're having with a lot of our clients right now. Just giving them a lot of options. Hey, you know, you could buy it down to this. Like, what is your budget? How do we get there? And how can we use the concessions to make that work? So this is a great chart. So thanks for bringing it up, because it does show that there's been an increase here.
absolutely. And, you know, tell me what your thoughts are, Ryan, just based on all of the applications you've taken, the conversations that you've had. I know where Matt stands with this. If rates come down, especially down into the 5s, do you see a shift happening here? Do you see a lot more people coming to the table?
Yes, yeah. You can even see on this chart, you know, when we did have lower rates, like in February,
you can.
look how much lower, you know, the concessions were.
Yep.
Obviously, with rates coming up and you know, demand may be lower, it's jumped up. So it's incredible how quickly and how rate dependent this market is. As soon as, you know, we hear some optimistic news on a peace deal and rates come down again, I think we're going to see a big shift. So, you know, it's a great time for buyers to really take advantage of these deals.
crazy. Just thinking this like just floated to the top of my head. We had a great number of showings on our properties over the weekend, and it had been a little quiet. We still were having showings, but it had been a little quiet in the last 2 weeks. And I'm like, I wonder if it was the positive news that was out about, potential peace deals and whatnot happening that caused people to get out there and look more.
Yeah, you could just tell like activity just spikes and or even slows down so quickly, just depending on the optimistic news that's coming out. And not just, I know we're talking about concessions in terms of dollar figures and seller credits to buy down rates, but we're also seeing a lot of sellers willing to make more repairs.
Yeah.
If we have an inspection and there's a lot of work that needs to be done, buyers are asking for them and they're getting it done. We had a buyer a month ago that got a brand new roof from a seller, because it was at the end of its life. And so it's great to see so many, deals out there for our buyers.
100%. We've gotten a couple of new roofs this year for our buyers. So we are seeing that quite a bit, aren't we, Matt?
Yeah, 100%. 100%. I think, I think there's a lot of good things happening, and I think people are starting to feel that. I think the more back and forth you go with this whole Iran thing, people are just starting to realize that it's just a normal kind of, it's going to be like business as normal. They're not going to have that same fear from it originally starting and then a peace deal happening and then that peace deal falling apart. It's like they're kind of just getting used to it. I think it's going to pave out. I think consumer confidence is kind of calcifying, like, if that makes sense, or they're getting used to it. Then you couple that with the seasonal time, like Ryan was saying, that people are now out of school and it's kind of aligning. So they're boiling up. And one of the things that I'd really like to point out too, that's very interesting is it was national news and it was just recent at the end of last week. And it was Berkshire Hathaway purchasing Meritage, Taylor Morrison, which is an Arizona-based new build, which is actually very, very interesting. And the reason I found it extremely interesting is, Berkshire Hathaway, this is Warren Buffett's company. He stepped out from it about a year or so ago, but they're one of the most successful investment funds, in the history of the world. And he's always done this by being extremely conservative and buying based on raw data and numbers. And it's not just the company, but it's usually the industry in which the company is. And now that he's exited, they're also trying to make their investors feel like, hey, if Warren's no longer involved, are they going to continue with the same methodology and approach? Because if not, we might be backing out. So it's very important for them to kind of maintain that same approach. And seeing them purchase a new build in Arizona right now, when everyone's screaming, it's the end of the world when it comes to real estate on mainstream news. I think this is the proof in the pudding that a lot of people need to look at and say, these guys see an upside. They see it that this is the bottom. This is where why they've been so successful is because they purchase at the bottom and they look at the long term. And, this is new build in Arizona. That would be the first segment of our real estate industry here that they would run from if there was truly like validity to what like these previous news lines we were looking at had. It's actually quite the contrary. So if anything, this really tells me, hey guys, I know that most people that are buying out there, they're not investors, but they look at it as investors. They're like, I want to buy at the right time. I don't want to overpay. And they kind of get in their own head. And they're just looking for information to make them feel good about this. Well, I think this is one of those really good things. And I think the other thing is, not to go too long on a tangent, but like what Ryan just said, we're seeing people getting big repairs given by the sellers. Okay. Now you got to remember that when you're purchasing the home and you get a repair that's negotiated after the fact, when this appraisal happens, they're not considering that. You know what I mean? They're not considering a new roof. If you negotiate $500,000 as a purchase and it needs a new roof and you end up negotiating that in, well, guess what? That's a value add that you're going to be able to add to that when you go to do a refi. And the reason I say this is there's a lot of people that it might be nervous out there and they're saying, hey, I've been saving all this money to put down on a property. Well, during times like this, you might not have to put all that down. It might be worth it to actually say, hey, I'm going to go with a little bit less of a down payment. I'm going to keep some of that cash for reserves to make me feel comfortable over these next couple of years. But then instead of putting that money towards the down payment, what I might do is actually do some improvements to the home. Because now instead of putting that towards the mortgage, I'm putting it into my home. So then when you go to refi out, you're going to be able to refi out. And if you only put 10% down, but you can show that you've created 10% of additional value to your home by a new roof, new air conditioning, some cosmetics, there's your other 10%. And what do we get rid of with that? We get rid of PMI. And that right there, it's a double wham. And now you've leveraged your money to give you that peace of mind, to reinvest into your home, give you that quality of life that you want while living there, and, you know, kind of checking that box for where your payment's going to be in the future. Whereas if you just put it all down now you're like, all right, I got to get that extra money to fix the house and all this. And, you know, and is that really worth the stress? It might not be. You might buy differently too.
Yeah.
Love it. Great point.
Good point. Yeah, great point. All right, guys, lastly, I just want to show you what's going on in terms of sellers market, balance markets, buyers markets here in the Valley. So this is based on our suburbs. And of course, Phoenix itself is in there too. For sellers markets, we're still looking at Fountain Hills and Chandler. I mean, they've been topping the charts now for, I don't know, a long time. And then we have Scottsdale in third position, Phoenix, Tempe, Glendale, Mesa. I don't think any of us are real surprised seeing those. We've got some other sellers markets, one El Mirage, Apache Junction, big. I've actually had a lot of buyers going for Apache Junction lately. And it's been a little tough to find the perfect spot. So that doesn't surprise me to see them topping the charts there. We have Tullison and Anthem also on that list. In terms of balanced, Gilbert's kind of like sellers balanced right now, leaning seller. Paradise Valley as well. Full on balanced markets. We have Cave Creek, Avondale, Peoria, Sun City, and Sun City West. I don't think there's any surprise there. And then buyers markets, of course, we have Goodyear, Surprise, Santan Valley, Maricopa, Queen Creek, Buckeye, Gold Canyon, Levine, Sun Lakes, Litchfield Park, Arizona City, and Casa Grande. So that is your rundown for the month, guys.
That is really, really interesting to see El Mirage and Tullison.
West Valley is
and if you would have looked back, you know, even a year ago, not even 6 months ago when we were doing this, and look at those stats, they were deep. They were really, really high in the buyer markets before everyone else. And I think that says so much. We wouldn't see shifts like that if we really had the true ingredients of a crashing market.
Right.
You wouldn't see these type of saturations in deep in buyers markets all of a sudden switch to a seller's market. It would actually be very, very different. So I think that's another really good piece of data to look at.
Absolutely. All right, guys. Well, we're pushing like 30 minutes here, and our monthly market updates are normally not this long, but we had so much data, so much insight, and so much juicy information to share with y'all that we just like, I don't know, lost track of time or something like that. If you guys, thank you both for being here as always. If you guys are finding value in these videos, again, please click the follow or the subscribe button on whatever platform you are listening or watching. If you want to check out any of our previous episodes, and I really encourage you to do so, especially last month. Last month was a great one. We basically answered the question, is the Phoenix market crashing or not? Because again, headlines can be very deceiving. Hop on over to our YouTube channel. It is at Team Evo AZ. That's our handle. Scroll down just a bit. You will see the monthly market update playlist. It's also its own podcast. If you prefer to listen just podcast style, you can do so on YouTube or on your favorite podcast platform. Do a quick search for Arizona Real Estate Radio. There you will find us, guys. We will see you next month.
Have a great month, everyone. See ya.
Absolutely. Have a great month, guys. Bye.
Looking to buy or sell in Arizona's hottest neighborhoods? Meet Team Evo AZ, your Arizona real estate experts, driven by data, powered by passion. Meet Matthew Lambert and Katie Holly Lambert, the powerhouse duo behind Team Evo AZ at eXp Realty. With their talented team of agents, they're making Arizona real estate personal and powerful. Trusted. Tenacious. Team Evo AZ. Team Evo AZ offers full-service real estate, powered by strategy, experience, heart, and a passion for helping people move forward. Ready to make your move? Visit www.evoaz.com and follow us on social media to connect with us.